Manisha. Thank you for having me on. Rupee has almost become like a self-fulfilling cycle over the last few days and a couple of weeks, where every round of weakness is sort of it exaggerates the expectations that it's going to weaken further. I personally had not thought that we would see a level of 96 and a half so soon. My sense is that if the war in the Middle East, if the Strait of Hormuz remains blocked and the war situation is not resolved, we may have somewhat more downside over the next few days or maybe a week or so. But eventually, I am an optimist and I do believe that a deal is going to be struck, in which case, a rupee is going to appreciate significantly because we are now deeply in oversold territory. And as soon as the situation improves, and if the Brent crude oil comes down to $85 or lower, you would see a 2 rupees or a 2.5 rupees appreciation per dollar very fast. But at this point, I'm unfortunately unable to say whether 96.45 or thereabouts is the precise bottom for INR, or it may worsen a little further over the next few days. But I am an optimist, and eventually rupee is going to appreciate whenever the deal happens. Though it may be, my sense is that it may take at least a couple of weeks for a deal to happen, if not longer.
So, Amit, you're saying 94 and a half is a probability only if crude prices fall below 100.
Actually, I think rupee is going to appreciate beyond 94 and a half, because what has happened is that huge gaps have been created over the last few weeks in its journey downwards against the dollar. So my sense is that now the real resistance for INR and the support for dollar would only be at about 93 to 93 and a half. So I don't expect rupee to appreciate beyond 93 to 93 and a half now. But I do believe that the downside in INR is somewhat limited at this point compared to the upside. But that upside is going to materialize only when Strait of Hormuz opens and Brent crude comes down. So the outcome is a little binary in nature. But before that, if the deal does not happen over the next couple of weeks, we should not be surprised if INR depreciates to 96.75 or even 97. But it would be a great buy at that point if that were to happen.
Much would depend on the crude oil prices, as you said. And Amit, is there a sense on what you're putting out in sense of crude prices then?
See, Manisha, right now, crude is in the vicinity of $110. My sense is that if the deal does not materialize over the next, let's say, week or so, we may have a tendency to go even higher on crude, and Brent could even go up to about 114, 115, and WTI could go up to 111, 112. So the path of least resistance for crude right now is actually on the way up and not on the way down. Of course, all that will change very fast if there is a possibility of a deal happening in the near future. But at the moment, it doesn't look like that the deal is going to be struck within the next few days, in which case we should not be surprised if crude oil goes up by another $3 to $4 from here. But I do repeat that at that point, crude oil will become a good sell, and INR would become a good buy if it goes close to 97.
Fair point that. The other one that I want to touch base on you with is the bond markets, because the yields have been rising globally. In Indian markets, even the corporate yields have been on the higher side. How are you looking at that 50% probability that the markets are working with right now, that we could be looking at one rate hike by the time it's December 2026 from US?
Yeah, so it's 50% rate hike probability by December 26, and it's close to 100% probability of a rate hike by June of 2027. Which is quite unnerving for bond bulls, considering that before the war, we were expecting at least two rate cuts by December this year, and about three to four rate cuts by December of 2027. So my sense is, Manisha, that if you look at the macro construct right now, the bonds do remain a little vulnerable at this point. Even though I'm a long-term bull on long-term government bonds in India and in US at this point, but they do appear a little vulnerable because crude oil may go up higher if the deal were not to happen over the next few days or in a week's time, in which case the bond yields would have a tendency to go up even more. But I have no hesitation in saying that the bonds will become a great buy within the next let's say within the next couple of weeks. If the bond yields were to go higher, they will become extremely attractive, and rupee is going to become attractive at 97, and crude will become a great sell at about let's say Brent at about 114 to 115. So these are all trades that are probably in progress, but we may have to wait for a little while for these trades to become even mature and more attractive on the risk return basis over the next week to 10 days.
Hmm. A final question on gold then, and this is a commodity that after making various headlines in the first quarter and most part of second quarter of this year as well, seems to be getting stuck now. So is the case with silver, volatile but stuck in a range.
Absolutely, Manisha. They are stuck in a range, and my sense is that the range is, let's say, about 2 to 3% higher and lower from the current levels over the next week to 10 days. I don't expect silver to go below, let's say, a level of 71, 72. So I would say that the range for silver could be 72 on the downside and about 81, 82 on the upside till the deal is till the Strait of Hormuz does not open. But if that were to open, then I am very, very confident that you would see silver at 95 to $100 price that we've been talking about for some time, and you would see gold at about a $5,000. But the construct right now is more sideways. And if crude were to go up and if bond yields were to go higher, that would also mean a higher dollar index from the current levels, in which case I would not be in a tearing hurry or rush to buy gold and silver at this point.
Hmm.
I would rather wait for the macro construct to evolve and crude oil to peak and dollar index to peak before we take another call on gold and silver on the long side.